What's up? Not the markets. Rich Strike is up though. What's going on? Well. Not a real surprise. I mean, maybe the distance went down, but we certainly said it was going lower, and here we are. We got to be on the lookout for. I did not have the long shot. I had a horse that could have won if he didn't get pinched. He was on the same path as Rich Strike, but Rich Strike had the most beautiful run you ever saw in a horse race. I had nothing. I got some goo. But look, I don't know. We're going lower. I mean, we're in a bear market. It's that easy. And expect the rip your face off rally. It's probably not far. I'm predicting tomorrow. Okay. We'll see. Listen, I don't really predict, but that I would, if we open lower, okay, that's good. Lots of puts. Make sure you roll them around so you don't get stuck with a lot of premium. You're paying a lot of money, big juice for those things. Okay, so a lot of things are predicated on how we open. Okay, if they're higher in the morning, I'll be selling them again. Okay, but I'm looking for them to get cracked overnight early, and I think you have an outstanding chance to take a flyer. A small risk to the upside just for a trade, because you're going to get a rip your face off rally. You can bet on it. Okay, it's going to show up, and it's not going to announce itself. It's not going to give you a shove and say, "Hey, we're going up." Okay, I mean, but there's going to listen. You've got a massive amount of shorts in the market now. Volumes are still pretty light, which is a little scary as well. Okay, when you look at this volume, okay, that is 1.6 million S&P. A day like this normally on the S&P would be 4 million. Okay, so again, you're pretty thin. Okay, and that'll make the rip your face off rally. Oh, I don't care about the CPI. Look. Whatever it is. Everybody already knows that it stinks. Okay, everybody knows that this is we're getting a good old fashioned ass kicking because you can't continue to see what's going on here. Okay, that you could possibly believe that we could continue to rise on air. However, as I've said before, you may see a change. The retailers might step in again, and the pros. The funds and the commercials, they can't sell too fast. Otherwise, they'll run the market down. It won't have a chance to give them that major beat down that it's gonna take. Okay, this is so nice about being hedged. Wee, and Biden's gonna talk about it. What's he gonna talk about? He don't listen. Forget about that. I don't like him. Ever never liked him. Okay, but he don't have any mind anyways. I mean, he's got a disease. Okay. So, that's the disease is a sad part, but he was always an idiot even before he had the disease. So, anyways, again, the volume's a little bit of a concern, only for when it does pop. Okay. That it's going to make it easier to drive them higher. Okay. And that's what you want to remember. You have to learn to expect those things that are going to happen. Now, again, it's going to be an excellent selling opportunity when it does show up. Okay, and nobody knows when it's going to be here. Again, I've been pointing to tomorrow since last week. Okay, they call you ever hear the term "turnaround Tuesday"? Okay, so I'm seriously thinking about it again, and I'm not doing anything. I've not. Listen, we're short, so it's not like I'm doing anything now. But I would certainly, depending on how we open tomorrow and where we're at, give strong consideration to taking a stab. Now, again, believe me, it ain't going to be a big, massive position. Okay, all it's going to be is a stab to try to benefit from what I expect to happen. And the dead cat bounce that I am expecting. Okay. The rip your face off rally which I'm expecting 100%. Okay. And again, I'm thinking tomorrow, but just because I'm thinking it doesn't mean that it is going to be tomorrow. You want to remember, again, I'm speculating like anybody else might. Okay. We have no idea if it's coming. We know it's coming for sure. SPY 410, and the SPY would be easy if it's going to go there. Again, remember, the question is if it's going to happen. We know it's going to happen for sure. The question will be, when is it going to happen? Okay, because again, there's no doubt. I mean, that's simple. That's simple if you've ever watched markets before. They just don't go straight in one direction, no matter what's going on, no matter what the economy is doing. It does not happen. Okay, so we'll see. Again, I'm not going to tell you it's going to tomorrow. Volume is thin because I think you're not seeing a lot of participation, because I think many of the people that want to participate want to be sellers. Okay. And again, that's just an opinion. I have no inside information more than anybody else, but that would be the indication to me. Okay. And besides the fact that, think about it, you have less money to play with right now. You have less money to invest right now. Depending on who you are, the markets are killing you. I mean, the gas, food, energy, your heat. I mean, this is nobody said anything about it. It's a big deal. Okay. Because, we've got, you may be making more money today, but okay, make away. You are not making enough to cover inflation. Okay. You are not making anywhere near enough to cover the rising cost. I mean, crude oil is up 200% since he was elected. Okay. So again, figure it out. I mean, it's basically simple math. Okay. If you make X and now you have to spend Y, and Y is bigger than X, which is it is. And that's the numbers that they admit to. And let's not talk about the people that really aren't working on top of everything else. Okay. That jobs number is garbage. Okay. Because they use what they call the U3, which is 3 months. Okay. Take a look at the U6. It's at the BLS. You can go look it up. Okay. I mean, it does. What they don't tell us is how many people stop looking for a job. Okay. Where they getting the money, I have no idea. But we know that there was so much stimulus, 5.7 trillion. I mean, that didn't go what we're supposed to. But at the end of the day, okay, what you've got here is you've got a market that's in trouble, and it's not a surprise. Okay, listen, this happens. This is not. We've been in a 12-year-old market, 13, whatever hell it is. At some point there's going to be a toll to pay. And all of a sudden interest rates are charging. I mean, mortgages are like 5 1/4, 5 3/8 now for a 30-year mortgage. Okay, I was whining at 4 1/4 2 weeks ago or 3 weeks ago. Okay, so and again, but I first, what was your first mortgage? Okay, no, nobody wants to work. Why should they? They can sit back and continue to wait. They're like the athletes, the free agents, right? They're waiting for a bigger paycheck. And right now they're paying what? Almost twice the minimum wage or more. And 12 and a half. Yeah, mine was about 11, my first, or 12 or 13. I don't even remember. Look, you got a mortgage, whatever it was. It wasn't something that you could negotiate with, right? You had no, as they say in Costanza, you had no hand. So, look, at the end of the day, again, it is what it is. Okay. And that's the rates. But again, as I said to you guys years ago when this all started, that the Fed would F it up, and certainly, that's like Guitar Boy, they certainly did. Okay. Again, they certainly butchered this. Going all the way back, first of all, they should have never done it. That's number one. They should have never bailed out a failing bank to let them get rich again at our expense. Okay, there was plenty of banks that were not failing. They were all forced to take the money. Okay, they should have bailed out the depositors. That should have been the tack. Okay, all right. So they bailed them out, which they shouldn't have. Okay, then part two is Bernanke tried to raise in 2013 and the market had a conniption fit. And what did he do? He backed down like the pussy he was. And here we are. Okay. So now somebody's got to stand up and it's going to get worse because now it has to go up much faster. Okay. It has to go now. It has to be at a much more extreme rate because this administration refuses to do what could have helped. Now, again, right now, it's probably too late even for that, but they could have helped by never shutting down the fracking and the shale producing. Okay. But again, they know better, right? They want, because they know what they want. They don't know what we want. What they want are not necessarily the same thing. Okay. They don't believe in capitalism. They don't believe in working hard to make good money and be able to take care of your family. And if you work harder and better than others, and you get paid better, they don't believe in that. Okay, they think everybody should be on the same, the same path. I don't know. What do you think? I mean, we might as well just, somebody wrote, I read something somewhere. I didn't read it, but I looked at the headline. They're giving $30 billion to Ukraine. Why don't they just give every American $1 million? I mean, it's only funny money anyways. Well, you don't have to sell. Don't be in a hurry to sell the rally fast. Okay. Be careful at what you say. You better find a resistance level to sell it. Okay. These bear market rallies are vicious. Okay. And they'll move 2, 3, 4%. If you're the first to jump in line in front of it to sell it, you might get taken out before it has a chance to do what it's supposed to do. You got to let them go to a level. You've got to identify a level before you start getting crazy. Okay. Wait. Now, but again, you got to wait. Okay. Again, the patience that you show in this business. This morning we made 4 trades, right? Okay, they all turned out to be winners. They weren't big winners, but they were all winners because we waited for what we thought was the right trade at the right time, and they came in. Now, again, look, at the end of the day, okay, it is what it is, and we can't make the market that we want it to do. I got to keep reminding everybody that that's not the way it works. Okay, well, you always do your thing. Listen, I know who you are. I don't have a problem. Okay, I get it. Okay. You take some much bigger stings than we do as well. But that, again, look, it's your money. It's not my money. Okay. I just give you what I think is best for everybody. Okay. But again, you have to remember that, if I were looking at this right now, okay, on a daily, I probably wouldn't want to be a solid S&P unless it got up to like, I don't know. Well, the first risk is going to be 4,000, right? But I probably want to sell this until, 40-20 or 40-30. Maybe higher. I think if I recommend, I'm not doing anything right now, but I'd say probably maybe 40-50. Okay. And it can really that much easy. And I appreciate it. No, it's all good. Like I said, it's all good. I get it. Everybody's not the same, and I get it all. It doesn't matter. Does natural gas looks like a blow up? But there must have been something. When Andy gets here, I'll ask him because he'll know. I don't look at this crap. Yeah, it was a great day for the Dreamers. Yeah. It was a great day. I think it was 400 and something or 500 and 1,200, whatever it was. It was good. It was a good day. There's got to be some news. Does anybody know what the news was? Somebody asked me this morning, but I didn't know because again, I don't watch the news, so I would never know. It would certainly look like a blow up, but my guess is, looking at that, there's support. Okay, if it doesn't reverse tonight, again, I don't know if it will or not. Okay. But if it doesn't reverse tonight, then it's probably if you now remember that's a vicious product, okay. But it's probably a buy for a trade, okay. But again, I remind you that, like when I talk about bonds with those when we day trade in the morning, the risk there is a little bit bigger than many of you would like to take, okay. So I think that remember, it's not what you can make; it's the risk that you have to take to make it. Okay, let's look at it from the other side of the coin. It's the risk that you have to take to get the money. Okay, are you willing to accept that type of risk? And that's what I'm talking about. Okay, that was a huge move, but a big move in steel. Crude got crushed. Okay. I mean, the petrodollar, but it still comes down to supply demand. And look, we'll see how this all plays out. This is not playing out very well. Okay. I mean, the drop in crude is good. I mean, not necessarily good for my position, but it's good overall. But we'll see how, again, we've seen these moves before. Let's see how it plays from here. Okay. That's the real key, is what does it do from here? I mean, if I look at this chart naked, without any information, to me, it's coming right down to support. And I'd be watching this on probably, a 5 or a 10-minute chart in the morning to see if we could find a spot where it looks like it's starting to turn higher again. Okay. But what do you say, Ash? But that, again, I don't even know if we're still going to be long term. I mean, we went down from about 8.5 to $7. Now we've been long since about 4.5. So, I mean, it's been quite the ride up, but at the end of the day, I don't know where it's going to trigger it. Okay. So I don't know. If I did, I'd be willing to share, but I don't. Okay. So, but look, we've got a lot of things going on and none of it looks too good. Okay. Now we've said this every week. I don't know if he's on yet, but just yell when you're here, bro.
I'm on. Sea of red.
I know you're here, but you're not always voice. What's going on, baby?
Sea of red. Sea of red.
It is a sea of red. What? All right, first question. I have a question for you right away because I was waiting for this. What happened with natural gas? Was there news or just sold off?
No, I mean it's the thing.
I mean, again, was it? But I mean, it was down early. As I think it was up last night when I looked at it, and then it got crashed this morning, and I got pounded later. Was there any news, or it's just going down? That's just
the price is still at the highest level since 2008. I mean, the thing is wild. It's just a wild commodity, and it's all over the place. So I didn't see any news. If there was, it's news to me. How's that?
Oh, no, okay, that's good. I mean, I didn't see news either. But
one thing. I hope you don't mind. I do have to get off at 3:00 today.
Yeah, that's fine.
5 to 3. A little bit early. I have to do something.
That's for whatever.
My children. I hope you don't mind.
Whatever. You got to do what you got to do.
Okay.
And of course that was the same for oil as well. They just happened to go down to it.
Yeah, I mean,
there was nothing that triggered those moves in your opinion. Is that what you're saying?
My opinion? I think I think my opinion is that people are heading for the hills and reducing risk. That's my opinion.
Okay. Well, again, that makes sense because you look at the commodities, and that's what I said.
It's not just commodities, everything. Everything looks pretty nasty. Sea of red.
Right. I'm in 100% agreement there.
Yeah. Sea of red.
Again, this is an ugly picture right now.
And if you're surprised that it's a sea of red, you've been living in a cave.
And you haven't been on the Monday call.
Right. You've been living in a cave because, hey, this is typical. This is what we've been expecting.
Well, I mean, again, it was pretty much of a no-brainer. I mean, the 10-year got to, I think, 3.12 today too. I mean, it came off a little bit, but they had a late rally in the bonds.
We went through my 136.16 level.
Yep.
But when we started talking about that level, the bond was trading 160.
Right.
Now we're talking 127 and change, and I think it's going there. It's just look. The bottom line is interest rates higher. You got a lot of risk in the markets. This war in Ukraine is not ending anytime soon. The Fed is way behind the curve. Even though commodity prices came off today, they're still very high. And inflation is still there. The supply chain's a mess. China's in lockdown. I can keep going.
No, again, we understand that's exactly, what you might expect. I mean, this is not a shock, nor is it a surprise to what we're seeing. I mean, who would be shocked and surprised about that? I mean, it was exactly as we've talked about it almost every week.
So there's no reason to be shocked. There's no reason to be surprised. And if you're not prepared, it's your own fault because we've been squawking and hawking about hedging and preparing for this. And look, this is not unexpected. I mean, this is a lot of times market moves come when people don't expect it. This was expected.
Right.
I mean, if you didn't expect it, like I said, what are you? You're living on Mars.
Right. You're living on another planet. So
right.
You got any bitches today?
My bitch is about the supply chain. I have to tell you, things are so screwed up. I had an appliance break, right?
Yep.
So I went into the store, local store. Are you in Chicago or are you here?
I'm here. I'm in Chicago. I'm in
Oh,
Chicago.
okay. That's what I thought. Mother's Day. Oh, happy Mother's Day to all the mothers, by the way.
Yes.
And so and to your mother and mine. And so I had to go in. I have to replace an appliance. So I went in. I had one question. What do you have in stock? Oh, we have this in stock. Okay. So I order it. So they tell me, okay, they're going to come. They're going to install it. They're going to come last Wednesday. Last Wednesday comes. They don't deliver it. Oh, it's in our warehouse in California. Okay, we're going to come Friday. Come Friday, they didn't come. Sorry, the truck didn't get out. We'll deliver it Monday. Comes today, this morning, an hour after they were supposed to come. I get a call. Oh, it's on back order. I mean, supply chain. I understand that the supply chain is screwed up, but it's like they're taking the money, but they're not delivering the goods. I got a full refund. I got so angry today. This was insane. The whole thing is out of control. Everything seems to be out of control now. And I think that it's more of a commentary on the economy in general, which is very, very worrying here. Very worrying.
As it should be.
Yeah. Yeah.
I mean, again, we've created a mess, and the mess is not going away.
No, the mess is getting worse because we don't have anyone who's seriously trying to clean up the mess. We have people who are using the mess as a political fodder and trying to divert attention away from incompetency to foster a re-election of a very incompetent government here.
Somebody wants to know what's the next shoe to drop. Listen, as I said from the beginning, this is my opinion. The banks were over leveraged all along, and they let them do it. In fact, at one point, they encouraged them, and they took off the restrictions of 10-1 for quite a while.
Right.
Okay. Because they were trying to do what cannot be done. They were trying to borrow their way out of debt, which cannot be done. But again, they tried again and got it stuck up their ass as usual. And of course, what does that mean? It means we get stuck. Okay, that's what it means. You and me get the foot the bill for their disasters. Okay, but yeah, I would assume that there's going to be a lot of non-performing loans that aren't getting paid. Okay, so we'll see, but that would be my guess. What's yours?
Yeah, I think credit's going to be a problem. I think everything's going to be a problem. I think, we're going to have stagflation. I don't think these commodity prices are going to just fall through the floor. I do not.
I think they're going to go back up. I think.
So do I. So do I.
If you ask me,
I think these are dips to buy in commodity.
Right.
Stocks, I think, are nervous here, and they're crazy. And I think you're going to see a lot of swing. And don't think that this is going to be a falling knife one way lower.
One second. If you ask me, that the selling commodities today was more related to people needing to raise money for their equity positions that were either getting margin calls on or trying to support. So they took off a lot of their commodities. They said that's the only place they had to go. That and Bitcoin.
Yep.
So
I agree 100%. And I don't think that the stock market's going straight down. I don't.
No, listen, I said before you got here, I said, be prepared. There's going to be a rip your face off rally. It's going to show up out of nowhere. Okay. And I said it's going to be tomorrow. That's my prediction. Okay. I've been pointing to Tuesday. Turnaround Tuesday for about 4 days now.
It's coming. It's coming.
Yeah.
It's just the whole thing is very unsettling. And look, markets, I've said this before, I'll say it again. Markets reflect economics and politics, and both are screwed.
Yeah. Yes, indeed, they are. So we see now, if you look at the chart, natural gas, I mean, if I look at that chart, I mean, I'm kind of hoping we don't reverse tomorrow because I'd kind of like to want to buy it there.
Yeah, I agree. Okay.
But again, whatever it is, it'll be, and it shall be. But I think, as you said, the selling in commodities today was more, I think, of a referendum of people needing money. I think, listen, everybody's getting a little bit nervous as we continue to see the VIX, right, continue to climb. Right, we found a new bottom now, like at 25. So it was you and I had the bet when it was between 10 and 20. Remember?
Right.
And then the new base became 20, and it looks to me now the new base looks like it's 25.
Yeah, 25 and on its way to 30.
And this steady move, this is a little bit fast, but not as fast. Again, it's not one of those straight up spikes like these. This is something that I would not be surprised if tomorrow it went back to 26 on a rip your face off rally. But to me, it's building higher support or higher lows, and I would expect the VIX to continue to move higher. And then when it moves at this type of pace, it means it's not a fear-based drive. It's a move based on actual positions being taken, not being puked out. What do you think?
Yeah, absolutely. Absolutely. I mean, the trend here is kind of if you look at this trend since early April, it's just higher lows and higher highs, right?
Yeah.
So,
I mean, even if you go back, we were in congestion, popped up a little bit, made a higher low, in congestion, popped up a little bit, and again, we continue to make that same pattern, which is pretty bullish from a charting standpoint. Okay, it may not be bullish. Now the VIX is only options being traded, being bought to open versus sold to open. So just because the TV set says it's the fear index, it's really just the amount of options that are being bought versus being sold.
It's the volatility index. It is what it says it is.
Right.
It isn't a fear index. It's a volatility index.
Right.
And you know what? Washington, the dopes in Washington, they cherry pick the economic news. So Friday, what a great employment report. It's unbelievable to me. It's unbelievable to me.
What made it unbelievable to you? I talked a little bit about before you got here. I'm just curious.
Well, the president comes out. He says, "Oh, we're creating so many jobs and things are so wonderful." Things are not wonderful. Things are terrible.
You mean that shutting down restaurants in part because you can't get help, or because everywhere you go there's a help wanted sign and the employers are having to pay like 2 to 3 times the minimum wage to get people to come to work?
Right. Right. And by the way, those employment numbers are totally fictitious because they don't count the many millions who dropped out of the workforce.
Oh, I knew you'd get there. That's on the U6, not on the U3, which they use the U3 to put their gauge up. There you go. Okay, so you guys, we didn't talk about this. There you go. There's the same thing I told you. It's the U3, which is what they use, and it's the U6, which is what shows you the people that have dropped off the rolls.
Yeah, I mean, come on.
Listen. I'm with you.
Massive.
1,000%. Look, I said the number, it was garbage when it came out, even though it beat by 28,000. They're not creating any jobs, and furthermore, they're just digging a deeper in a hole, and politically, they're digging a deeper hole as well.
Just remember when it comes to all economic data, and listen, I'm a student of economics, and I'll be the first to tell you this. Economics is a social science. It's an art. It's not a science. It's how you massage the numbers to meet a political agenda. And we have never in our lifetime seen such massaging. They're basically running Washington as a massage parlor. And you know what goes on in massage parlors?
Oh yeah,
a lot of prostitution.
But there's
by the way, which is
happy endings here though.
which is synonymous with politician, prostitution, politicians. It's a synonym.
No, nobody talked about the 100K workers being. I told you we talk about it. That's the point that and again, in defense of this administration, this has been going on forever.
Yes, absolutely.
Okay, again, not that I want to defend these imbeciles, but in their defense, they've been fudging with this number since it became much more public. When I first started trading, it wasn't what it is now. It really did mean something, and there was some real surprises, and the markets reflected those surprises by major movement. Now, Goldman Sachs, and not because they get it early, JP Morgan, not because they get it early, there's enough information that is floated out every week that if you have a good, solid team that knows how to compute those numbers, they can tell you the numbers before the government tells you.
That's right, and their numbers are probably better than the government.
Right. Okay.
Right? And it's the massaging is financial engineering, and you start with an agenda and you back the numbers in to support the agenda. That's what we see.
So how do you engineer something that's broken?
Well, it's not that they're false. What we're saying is they're false numbers. They're broken. It is broken. It's false numbers. So you're putting out these numbers, and then you're saying, hey, this is why we're so wonderful. This is why we got to vote for our Build Back Better, which is really Build Back Worse. program that'll only keep this inflationary train running. It's the whole thing is a nightmare. You said it before. I'll say it now. Start drilling.
Right.
Solve the energy problem. Solve the energy shortage, and you're 60% of the way there.
I mean,
Then you fire the Fed, and you're the other 40% of the way there, and let the markets dictate interest rates.
Oh, you mean the markets can price themselves? I didn't know that. You know, it was amazing. Again, it's 100% correct. I mean, I don't understand why, and I know we talk about the progressives, but again, why is their agenda so anti-American?
It's pro getting them reelected. That's what it is.
But it's anti-American. I mean,
because it's fear.
The whole style that they're running is anti-American.
Yes, because what they do is with that is they inject fear, and fear is very powerful. Listen, fear and greed is powerful in the markets. Fear is very powerful for politicians. It keeps control. They want to keep control, and it's not just here. It's Canada. It's Europe.
It's everywhere.
It's Russia. It's China. It's all fear. You think we're any different?
Well, no.
The only difference here is that you and I are not going to get sent to a gulag for talking about it.
We were different at one point. I mean, we always had some of these issues, but we were slightly different because we did have the chance and the freedom for free markets. And now they're trying to take that away from everybody as well. Okay. And I think that's a problem. Okay. You know, those are the things, you know, I'm a big fan of letting asset classes price themselves, whatever they're worth, right? The true price discovery model.
Well, the whole thing is that if you let the market price the assets, the economy will adjust to the proper prices. What you're doing is you're not allowing the economy, you're allowing the economy to adjust to artificial prices. The economy is like a blind man in a maze.
And there is the whole problem with the Keynesian theory of economics. And don't get me wrong, I'm not saying that Austrian is, but anyone's better. I think it's better if they had a blend of the couple, right? If you took, you're an economics guy, I'm not, but if you took a little bit of each and said, you know, because here they don't want you to fail. Keynesian doesn't want anybody to fail. They continue to try to bail them out. Where in Austria, just let them fail. If you're not among the strongest, you're going out of business.
Right, and the best economics is really to allow the marketplace to establish prices without government interference, and then you get transparent, fair prices. That's my opinion.
I agree. Listen, that's the funny thing. I mean, you're 100% correct.
And by the way, the government is a participant, but they are not the controller. Look. The government runs a lot of businesses that affect the economy. Okay, so they have some, input into the economy, but not all the input. What they want is all the input, and they want the input to lead to a explanation that supports their agenda. This is where we get all screwed up.
Right, and that's
now, mortgage rates. Where should they be now in this economy? 8% probably.
Oh yeah.
Right.
Maybe higher.
Right. And by the way, where should they have been last year when they were 2.5%? They should have been 8%. Right. And this is why you have all these problems. And they're going to.
No, again, listen, I don't agree. So far, I don't disagree with anything. It's again, we've created a mess, and
monster. It's a monster.
And the problem is with a monster like this, unfortunately, it's got to get worse before it's going to get better.
And there's so many holes in the system that cybercrime can make it much, much worse than it is.
Listen, that's another topic that we could spend hours on. In the meantime, it looks like it's the markets and continue as we go through them. But the dollar, which was higher earlier, spiking through, failed at the support. Now we're long dollars, right? And again, it's not a trading product, but it is something that you can gauge certain things on. And it's only, listen, know one thing, the fiat currency system itself is fraudulent. Okay. And it's just a matter of how they snap up cash to flush it down the toilet between all of them. But the dollar is still the reserve currency for today, and it is going higher. Okay. And it looks like it's probably going a lot higher from here because the rest are even in worse shape than we are. What do you think?
We broke out to a level that's at the highest level in 2 decades. We're at the highest level in the dollar index since 2002. Listen, you follow trends. You got to be bullish on the dollar index, not the dollar index. And what is
Right.
the dollar index? The dollar index measures the dollar against the euro, the pound, the yen, the Swedish krona, the Canadian dollar, and the Swiss franc.
All right.
That's what it does. That's it.
So, Connie, you got 103 support. 104 was resistance. But again, we're not sellers. Listen, if I'm on one side of the market, I am not selling. I'm not reversing on an overnight trade. I might trade. I would never trade this during the day. But if I was trading during the day, so remember, if I tell you I'm short or long, I'm not. I'll give you the other side of where it might slow down, but I'm not reversing at that level. Okay. So
there's no. By the way, there's really no resistance.
No,
Bubba, in the dollar index until 121.
Right. No, I mean, this could be, and the funny thing is this is actually, if you look at this over a very long term, this is also forming a long-term cup and handle.
Right. So even go back further, go back to 2002.
Yeah, I will. I'll do it right now. Hold on, Sparky. Yeah, maybe right now. Let me go to a weekly. Okay. And this will take us back to here. There's 2001. Here's the 2000.
There it is.
Yeah.
Well, 121. That's your target now.
Okay. So
broken out.
In the end of the day, okay, again, so 103 to 104 Connie for you and for everybody else. Look, we're buyers, but this is again, obviously, depending on how many funds you have. I mean, we only carry this in our 350. So, and of course, the euro currency, which suddenly had a little bit of red, but look at it. It is just hovering around the bottom. It's going a lot lower. I'm telling you, it's going to par first, and then it's going lower than that, in my opinion. I think my target is 88 cents here. Okay. And I see no reason. In fact, I think what we do have now is a great resistance level at 106.60 or so. And I would be happy to sell them more there. Okay. I would be happy to give them all they want at 106.60. Okay. And so, Connie, for here, 105 to 106.60. Okay. And the Bitcoin plunge. Look at that.
Yeah.
Wow.
It's going to go one way or the other.
Well, we said that last week. We thought it was going to go higher. It went lower. And again, is this now? The interesting thing is it's becoming much more accepted globally. I mean, look at the commercials. If you're watching any of these sporting events, every other commercial is about cryptocurrencies. Mm-hmm. However, as I said earlier, and as Andy agreed, the margin calls that were coming have to be satisfied. So where are you going to? And this is also the classic error for most people. What do they sell first, Andy? They sell stuff that's strong. Okay, which is the wrong side. You sell stuff that's weak.
They sell where they have a profit so they could pay for their losses.
Right. Okay. In the meantime, this has broken down and we're short. Okay. Now, again, I always give you full disclosure. I'm long, I own Bitcoin. I own the cryptos in an account that I'm never touching. It's either going to the moon or it's going to zero. Okay. I've prepared myself that if it goes zero, I don't care. I mean, obviously I care, but it's not going to change whether I eat or not tonight. Okay. This is pretty ugly all of a sudden. Now, this could be, and it very possibly could be a blow off bottom too. Now, we won't know that yet, but we're short. And right now, if you're looking at this chart, 35,000, you want to be a seller for sure. And if you're trying to fish, look, I don't like to try to catch these things, especially something that moves as dramatically as Bitcoin does. But I would suspect that, 30,000 might be a spot to look at. Okay, another $900 lower. Look, it may be 25. Remember, this thing went from, what did it go from 50 or 40 to 10 or 5 and then back to 70 and now back. I mean, this is the true Wild West that trades 24 hours a day, 7 days a week. Okay. So I would be watching this I'd like to see what it does at 30,000 because I might trade this as a blow off trade, although I'm short, but I might trade on a short-term scale looking for a little bit of a bounce. But for as far as levels, 30,000 is going to be key, 35,000 is resistance, and I'm not a buyer for any more than a short-term trick.
Really, below there, you got to go back to December 2017 where that high becomes the support level. That's like 20 grand.
So again, it's pretty ugly, but again, this is how this would be if this bear market in Bitcoin is going to end. This would be a good spot for it to end. Okay, so we'll see. The bonds, which you nailed, it actually went below your level, and I think they're ahead of your next target, which is what, 126 something or 129?
127 and change, 127.23, I think it is. You can look on the chart. It'll tell you.
I mean, the rally here was nothing more than a rally. I mean, look, to me, if I look at this, it was nothing more than a short covering rally. They had them down pretty solid overnight too. They get down to 134.30. Okay, here they looked like they were going to go to zero, and then suddenly, as happens, out of nowhere, they couldn't go down anymore.
Yeah, we've seen this. Look at the low from April 20th or so. You know, we did the same thing. We made a new low and then we bounced up. We do this a lot. These things just rejuvenate themselves, but this is a bearish trend. The next level is 127.23, which is, I'm just looking on another chart here, the December 2013 low, and we should expect them to go down there.
I've got orders working at 138. Okay, to me, 138, 135 is obviously, we saw that it paused there. It could certainly act as support again, but I'm looking to be a seller at 138, which isn't that far from here.
No,
so
no, and
135 to 138.
You know, listen, would you be shocked to see it up at 140, 142? No,
I would not.
I would be as shocked.
I'd be out looking for another entry.
I'd be shocked looking at it if it was at 144, because I think that this pattern of lower highs and lower lows stays intact.
Yeah, you don't think it get? I agree. I mean, look,
I don't think it gets.
It's going to reverse, and I don't see. There's nothing in my mind that's going to reverse the interest rate market. Okay.
The only thing would be a massive, if the stock market were to move 30% low in a very short period, then you'd probably see a huge spike up in the bonds.
Well, we're talking about extreme terms. Yeah, I don't disagree with
extremes, extreme. But in the current situation, I'd be shocked to see 144.
And of course, we're still short. And again, I'd love to sell more. Gold, look at what happened here.
Higher interest rates weighing on it, but we're going to go back. We traded around the 1800. It looks like we're heading back there. Yeah. I don't think gold's going to fall apart. I think the thing to keep your eye on fundamentally with gold, Bubba, is if China follows Russia and starts making noise about backing their currency with gold, that could really ignite gold. So be careful in gold. The gold is not.
Well, 100%. Look, as you know, we trade at one level at a time, and the long-term view is it's going probably a lot higher at some point. Right. But right now, it's a mess. And right now, 1850 is a key level of support, which is right where it's at. Okay, it went there, believe it or not, after the actual market close of gold, which is 130. It got there a little bit later. But here it is, it's sitting. Okay, now what does it mean? Well, I mean, it doesn't mean anything right now, but certainly it would not be a shock at all if it went back to 1800. And it would not be a shock if I told you that a lot of people sold their gold today because they needed to raise money. That wouldn't shock you.
Exactly.
So I think this is 1800 and 1900. We're short, okay? But remember, we may be short in paper, but we're always long physical.
Yes.
Okay? Because we're not trading physical, we're accumulating physical.
I mean, I talk for myself. I don't know if you're the same.
Well, listen, I actually tried to buy some platinum today.
Right. If I'm short gold, it means I'm flat because I'm short against what my physical holdings are. Right. And if I'm long gold, it means I'm doubly long.
Right. No, exactly. That's exactly what it means. Right. I would say 1800 and 1900, but watch 1850. That's the real key to watch before anything. Okay. It wouldn't surprise me if we got a pop off of 1850. Again, remember, we've been churning in consolidation. So we identify this as consolidation first, then this is at the support level anyways. Okay. Now we are short. So again, but 18 to 1900 is the major levels. 1850s could be a swing point here. Okay. And silver, well, look at this. Silver looks worse. Silver is broken down yet again. Okay. Now, as Andy will tell you, it could go right back and go crazy. But right now, it is broken through another key level, and it looks like it's headed to 21 now.
Yeah, 2141 is a key level, Bubba.
So we look like we're headed back there again. And I would say to you that, 23 is solid resistance. Okay. And, 22 was support. It's gone for now. Now, this could be false. This could be a false breakdown. Okay. But for now, look, silver is tough to trade in the futures market. they're not, silver is not the most liquid of all to be actively involved. The tick sizes are big, and the paper silver sucks. Okay. Again, I would never own paper for an investment. I might trade paper, but I would never own it. But I would watch, it's 22, but it certainly looks like we're headed to 21. Okay. And I would look at this 21 to 23, but again, I'm not a buyer yet, on the board. I'm a buyer in my physical holdings, but not on the board holdings. Okay. So it looks pretty awful, 21 to 23. Platinum, which we don't trade anymore, but it seems to be 900 looks pretty solid, Andy.
Yeah, it does. I mean, it was.
I look at it go to 800 in a second too, right? This is not exactly the king of liquidity either.
No, there's no liquidity. By the way, it could vacuum down. And if we use the last couple of years, this kind of price action tended to lead to a vacuum down. So I wouldn't be surprised to see 800. But
it's funny. I had an order working. I had an order working in early. I was trying to buy at 910, just for a trade, and it never got to get the 912. But again, we don't trade this market. It's really not liquid enough. I mean, any individual can trade it, but when I look at this chart, it's like 900 to 980. Okay, and it's kind of in the middle of it right
Palladium
now.
fell apart.
I did put palladium. Hold on. I did actually put it up on my. Oops, I don't want that one. Sorry.
Yeah, it fell.
I did actually put it. I put up just a futures chart, and there's palladium on the bottom because I knew we'd talk about it. And palladium was higher today, but it's higher from a market that has broken through support.
Right. It's a bounce, a dead cat.
Now, if we could trade palladium, which we can't, I would probably look to be a seller right here at 2113, but we can't. So it doesn't matter. It's a moot point, but it looks ugly, but it is somewhat related to the platinum market as well. Again, look, we don't trade platinum because it's not liquid enough, but I'm certainly happy to buy more in my physical stash. Okay, so let me go back to this other chart because I'm now out of sync. But anyway, and copper, well, it came down to what, 4 to 13 and bounced again, but it looks pretty bad. We're still short copper as well.
It looks bad.
No, I know you think we're going to 6 something, which I don't disagree with. I think
eventually,
again, I think the commodities are going to be very strong, but I do think that not only was it in a downtrend, but it had some pressure from other sources.
Yes.
So you see it go down. I mean, again, it's never the end of the world. It's something that it's in a downtrend. So going down, it shouldn't be a surprise. Can it do you think get the 4 or below? I mean, I know it can, but what do you think?
Yeah, of course. I mean, I think it could go down. I'd like to see it spike below $4. I'd love it, but do I think it's going to happen?
Right.
It's unlikely, in my opinion.
Again, that's what you're giving. Your opinion, 100%.
Yeah, unlikely.
Okay, so for today, okay, I would say 425 would be resistance. Okay, now I don't know how aggressive I'd be at 425 because we're already significantly lower from where we were. Okay, I'd like to see some better action, and because the trend here is actually almost perfect, it's not steep, it's not out of line, it is pretty much perfect as it's going down.
See, but copper does that, Bubba.
I know.
Copper is just a beautiful technical metal. So
right.
If copper is in a long-term bull trend, which I think that the key level to watch on the downside, and maybe the place to kind of to give it a shot is around the just under $4, because I could see copper going down to 397, which is just above the 396.15 level, which was the low from last August, and holding there and then starting higher again. So it just happens to respect technical levels.
Yes, it does. So anyways, 412 to 425, but again, I'm only a seller. Okay, if I'm going to trade it at all, I'm already holding a short position. And as we move into the grain markets, okay, look, corn did break down a little bit today. Now, again, we could be reversing tomorrow. I don't know. Again, remember, I don't know yet until the middle of the night whether what we're doing. I hope not, but I wouldn't be surprised. I mean, it did break down finally out of that 3-week consolidation pattern after charging higher. When it was looking great, it does not look as great as it did.
No, but corn could go to $7. It's still long.
I'm with you.
Turn around and be $9. I mean,
when I was on RFD today, I said, look, to me, for now, this first move to me is just a wholesale selling of everything and raising money. Okay, where it goes from here, we'll see how it plays. But as I look at this and based on our position as it stands, okay, 760, 770 is the support level. In fact, I'd be looking to buy here if we don't reverse. Okay, and I would say you're looking at $8 as resistance. Okay, that's how I'm looking at it. But again, we could reverse. I could change that read of how I'm going to trade it in the morning. Okay, I prefer to be long the commodities in general because, again, money is if the selling continues in markets, which I expect it to do, money is going to be looking for a home, and usually it is the commodity markets. Okay, soybeans, which we are short, well, they've really done a little bit of damage now over the last few days. They're down almost $1 in 2 days. And again, is it a big deal? No, it's especially if you're short, but it certainly has set up a bigger range, and we're at a pretty key level. Okay, to me, 1550 to 1650, and again, that's less than the limit. So, I mean, it took 2 days to get here. We could see a big screeching rally, and what do you got this week? Progress and what else?
WASD, the 12th,
okay.
the 12th.
So who knows what they're thinking right now? We are short.
But remember one thing about soybeans also, soybeans, $1 move is like a 45-cent move in corn. So you had the 45-cent move in corn, you had the $1 move in soybeans. There's
right.
Just, nominal prices.
Right. I mean, again, one thing where I try to remind you always is don't get so caught up with what the number is, because when the numbers are bigger, the moves are bigger. That's just, in the meantime, I'd say again, like about 1550 support. And again, I wouldn't be a buyer there because we're short right now, but I would be a seller at 1620. Okay. So we'll see. We're still short. And wheat was up today and that was down, but wheat is the only one that isn't, that it really didn't participate much in the last run up after it had that, those limit up days, but it's still solidly in consolidation and still trying to peak to the top.
11 bucks.
In fact, the levels that I gave you last week, 1040 to 1140, have not changed really.
Right.
Okay, 1040 to 1140,
and it hasn't hit either one.
Right, so that's what we're going to watch. Okay, and we're still long. And we're still on corn for the moment. And let me just switch to the other chart just for these, because these are always a little bit trickier on this platform. Feeder cattle, and it was funny when I did the update this morning, it was lower. Okay. And let's go to August Q22. Good, and they were a little bit lower, but again, not bad. Now we're short feeders. I think I always forget. I always get them confused. Or hold on, I have to check my position. Give me a second. Okay, I apologize. We are long feeders and short fats. Okay, but again, I don't particularly care for this market. But I personally believe. What do you think? Is that the cattle markets are basically trading the other side of oil?
Yeah, I think so. But I think the feeders are also watching corn, which is also trading off gasoline.
I mean, but because I try to explain it like this, and I think in very simple terms. People have X amount of money to spend on food and fuel for a month. Okay. So if beef gets too expensive, they're going to go to pork. And if pork gets too expensive, if they can get poultry, which was way up, but I don't know what's going on with the bird flu, but they're going to keep trying to get a protein, but they're going to have to keep stepping it down. So if you get a big spike in crude, then you're going to see probably lower cattle prices. That's how I look at it. But in the meantime, I would look for support probably around 172. Okay. And see, I did get down there today. In fact, when I did my update this morning, it was down around that level and it popped. Okay. But I think it was like 172 to 178. And fat cattle or live cattle continues to break down. Now, it did pop up a little bit late today, but it is, again, it's breaking down. So we're looking at June here. Okay, and this is a perfect trend to the downside. Okay, and certainly I would be looking to sell it at probably 135 if I didn't have a position. Now I don't trade the meats as aggressive as I trade other things because they don't have enough liquidity and there's too many shenanigans that goes on there. So I just assume trade the positions but not get too crazy. Okay, in the meantime. Right now, there doesn't appear to be a bottom, but obviously 131 was where we bounced off today. See what happens there. But to me, it's 131 to 135. And if I didn't have a position, I would certainly sell 135s. And the hog market, again, it's struggled recently, Okay, let me just put June by itself. I want to see without the continuous chart.
101, 101-ish.
It's 100. I mean, it got up to 127. It's now down at 100. Now, I would suspect that the 100 is going to be a pretty strong area. Now, we're short. Okay, so it's been
I would
good
think
for us.
so too. I would think that there's probably a bounce coming here.
You know, I think you see a potential bounce off of 100. Now, look, we're still short. So, but I expect a bounce, like I told you last week. I'd expect a limit up move, and we got it late in the week. Okay. And again, I expect nothing more this week. I expect a limit up move at one of the days this week, depending on how it works. But I'd be willing to make a small wager that we get a pop. But again, it's where it comes from. So it's not a question of just being right. You got to know where it's going to start from. But in the meantime, I'd watch the 100 level in the hog markets. Okay. And then natural gas, which we talked about, right? I mean, to me, I'm hoping this doesn't change tomorrow. Okay, now it could. Again, I don't know. I can't get the information until later because I've got to run all the stuff. But at the end of the day, to me, I could look at this. I could be a buyer here if I traded this actively, which I don't, because Andy and I have discussed many times that this is the true Wild West of trading, and you better have an account that is capitalized well enough to play in this market if you're going to try to trade it actively. Okay, because if not, you're going to be scared out at every turn. Okay. And if you remember, October of, I don't know, whatever year it was, 5 years ago, whatever it was when they went broke. Okay. The optionslows.com, that was a great trading day. But again, it takes a lot of capital to trade this. And I highly recommend you don't try to day trade it unless you've got lots of capital and you're really good at it. Okay. So for today, well, we're still long. I'd say $7. Okay. And the resistance is 8 and then 9. Okay. Now we did come from $9, so it had a hell of a move up there. Okay. Crude oil, we're still on this thing too. But again, if you look at this chart objectively, okay, without having an opinion, okay, you can't really get that bearish about what this looks like. The sell-off didn't even take out the first support level. Okay. So how bearish is it? What do you think?
It's not bearish. Look,
Yeah.
We just finished in March, right? 1, 2, 3, 4, 5, 6. Let me just count. 2, 4, 6. Our 8th consecutive quarter of gains. Okay. To get the 9th consecutive quarterly gain, we need to close over 101.20 on June 30th. So the bottom line is that crude oil looks great. And now 100, okay, 100 is like a pivot point here. Okay. The fact that we handed energy policy back to the criminals at OPEC is, it favors the
It's
brand.
criminal.
That doesn't mean that we're not going to have corrections, and this thing goes crazy. But I think 100 is a pivot point, and I think that below it, that's we're going to follow the trends because you never know.
It's treasonous.
Yes, it's treasonous. It is.
So I mean, for today, it's 100 to 110. Okay, 100 support, 110. Okay, and again, remember.
And by the way, there were a lot of people long it, and I think that they were selling it to make margin calls. Oil is a logical place for them to be selling. The one thing about today, that even though oil was down, and it was down almost $7, 6.70 or so, the products were down a lot less, and the crack spreads are up, and that is more important than the crude oil.
Right.
Because we don't fill our cars with crude oil. We fill it with gasoline, and we don't travel on planes that run on crude oil. We travel on planes that run on jet fuel, and those prices are still high, very high, and they're going higher.
Anyway, 100 to 110, and again, you could see this thing can move. Look, today's move 7% is not a shock anymore.
No.
Cocoa, we're still short, and this is broken down again. So this is. For whatever reason, this didn't really participate in any of the commodity rallies, and it's getting worse. Now,
okay.
At some point, it's going to make a big charge the other way, but what's that point, sir?
Well, I want you to put up a longer term chart. So
sure.
I want to show you something. I want you to, go back.
I'll put up whatever you want. Is that long enough?
Oh, much longer. A little bit longer. Boom. Okay. Right there. Stop right there. So this thing is going nowhere fast. I mean, there are nice trading ranges, and we try to follow trends. We catch a little up move, catch a little down move, but we're not catching the crazy, volatility in other markets. But if you notice that the bias is higher lows mostly, a
Yeah, I
little
can
bit
say
of
that.
higher highs. The bias is to the upside, but within this range, the thing fails every time. But when it breaks, my odds favor the upside.
I see, but see, I look at it both. I look at both sides. I agree with that part of the announcement, your views, but the other part is we're coming to a point where it's going to have to make a much bigger move,
Yeah,
and more than likely that much bigger move will be higher. Okay.
that's what I just said.
No,
Yeah.
no, no, no. But
Yeah.
you're pointing it. You're getting much narrower as we get closer, right?
Right. Absolutely.
So again, but right now we're short, so let it continue to
I
go lower.
agree. Let it go to the bottom end of the trend.
Let it go. Let my people go. Let it rip.
30 to 23.20 is the big level on the downside.
So you look at this, right? We're right. This is actually, we go back a little bit longer. This is we came off of key support a little bit today. It's still down. Okay. Now the other thing I look at this is it's a little bit steep. So I wouldn't be surprised. And if I were looking to sell this, which again, I don't trade this. Look, the soft commodities, I'm not looking to be active. Number one, they screw you at the COMEX, you got to pay a fee, which I refuse to pay. Okay, so I trade it as a in my portfolio positions. I'm not going to be active. If I were active, I'd be looking at about 25, 30 to take a whack, to take a short position here. But again, I don't trade active, and I don't think I do. We are short. I will remain short until that changes, and it could break below this downside. We'll see. I don't know. Okay, and cotton, wasn't cotton up today at one time? Did I look at it wrong? I thought it was higher this morning, but either way, cotton is unbelievable. Okay, yeah, it was down today, but look at where it's at. It's right on what I would think is support. We're still long cotton. Okay, and I don't see nothing here. It gives me cause for concern. Another down day, I might get concerned. Okay, but this is really just on support. And if you just look at the overall pattern, the pullback was natural. It went too fast up, so it came right back down to this key support level. It should bounce from here. We'll see. And I would say, for my
The
money,
only thing I will say about cotton.
good.
One
It
thing
usually peaks this time of year.
Yes, May is the time. Listen, that's just the month. It's just May through
I
July
understand.
is a seasonal high, but this is like no other year. So
Right.
and
Didn't we take off last year in May to the upside? Well, didn't we take off from 49 cents when we were in May?
Yeah, but that was in during the.
No, I get it. I look at it again. I'm just saying, look, I understand and I agree. However, we're in strange times now with a lot of weird stuff happening. Okay. So in the meantime, I would look at 142, and you're probably 142 to 156. Okay. But again, we're long, so I'm not a seller. Sugar. Oh my God. This your guy was right. Why would you pay for something they give you for free at the restaurant? And really, we're short. But look at it. It's dead on support and it's dead in consolidation.
The price is 9 times higher than when he said.
Right. I know. I'm kidding. I mean, look, you're 18. This is for us who are shorted. We're the key spot. It needs to break below this. Okay.
Yeah.
From that point
on
down,
the downside then is 1760, which I view as critical.
so you're right. And that's we got it marked in right here. Okay. So right now for today, look, I wouldn't be a new seller here today because it's on support. Okay. If I were going to trade it, which again, I don't trade this actively, but I'd be a seller about 1920. Okay. For me, it's 1850 to 1920 for now, but we are short. And OJ, which is the worst of them all, and we're still long. But again, it's just, they just sold off far enough to support. Okay. Now, again, is it going to make it and hold here? I don't know. I mean, certainly I could make a case for either. I could certainly make a case for the downside. Okay. Certainly at the prices at as well. I mean, these prices are ridiculous, but
look at how many contracts trades this thing. I mean, it's almost
so are the prices and everything else ridiculous. So why should I think differently here? Right. But 170 is probably a pretty key level, and probably 180 is the resistance. But again, this is the worst of all. And I would not trade this actively, number one. Number two, it's thin. So again, but 170 to 180. And coffee, well, we're short coffee and it continues to break down. Once again, it broke down, but it came from 176 and much lower before that. The move up to 240 was huge. Okay. So you're getting some down, but we are short. So it's all good. And I wouldn't be surprised at all if coffee rallied a little tomorrow. Okay. Because again, you're getting the steepness of the down move becomes that's truly an oversold market. Okay. If it steadily goes down, it's not oversold. Okay. When it goes down quickly or up quickly and they escape either the moving average you're using or the trend line, however you want to look at it, when it gets too far away, that line acts like a magnet that drags it back. They drag you back in. Okay. So for my money, you know, Ann and I both thought I was going to $3. I haven't changed that opinion, but it just happens that I'm short right now. What do you think?
I agree. Listen, it's correcting. I view critical support at 176 in coffee. That's where it broke up from.
Yeah. I mean, again, I could see, I could make a case for anything, but it's just easier to make a case for a trend. Remember, okay, that the trend is your friend, as they say. And, you know, for extended periods of time, we get in these misery of consolidation, which is not great for trend trading models. Okay. You know, depending on how far they swing, you know, we get some of these wide sweeping consolidations, they become much more problematic for what we do. But again, that's being able to live through the drawdowns, which we all know that they come. Okay. And you cannot change the dynamics. You just have to understand the patterns that you're in and look for the best opportunities that you get. Because overall, to me, you look at the VIX continues to pop and it looks great from a trading standpoint, but certainly a pullback here or a sideways action for a while would be no surprise. This drive up the last couple of days is a little bit too steep. So all that means to me is that there's going to be a pullback. Okay. And, you know, again, that would tie into the rip your face off rally. Okay. That's what you want to remember. Okay. That we're expecting, even though we're short, okay, we're expecting a rip your face off rally. Okay. And I don't think there's any doubt in my mind that it's coming. But again, you can't time it. You have to look for an opportunity that might provide you, and you have to find an inexpensive way to get into it if you're going to trade it, because you just can't say, well, I'm going to go buy some calls. Well, if you're paying, what's the IV on the SPYs, for example? I bet you it's about 35. I don't even know. But if it is, that's really untradeable at a straight long. Okay. Because if you get a collapse in volatility, you're going to get crushed. Okay. Yeah. 38%. There's no way these can't support 38% on any given day. Yes, it can. But you get a volatility crack, okay, and you're on the wrong side. These things are you're way overpaying. These should be trading at about a third of the price they're trading right now.
They're going to evaporate like water in the desert.
I mean, you know, again, if you haven't seen it before, pay attention, because I'm telling you, I hear it all the time. I had a guy a few weeks ago, a friend of mine said, I got all these puts on. How come I'm making money? I said, because you overpaid for them all. You can't make money. If the expectation of movement, I mean, the SPY is supposed to move in the next, by Wednesday, they're looking for, that was today, for Wednesday, looking for a $10 move by Wednesday. And again, it's not that big a deal, but for this, it is. It cannot support this high of volatility. Okay. That's what you got to always keep in mind. Okay. The volatility is where it lies, and understanding the pricing. So you have to now, if you want to get short, you have to create a position, buying naked options. Can it work? Yes. But are you going to be successful over the long run? No. You'll get destroyed over time just buying or selling, buying.
Yeah, you got to adjust the market structures you put on to support your view based on volatility and where it is, and increase your odds. So, you know, in a high volatility situation, you're better off, you know, spreading and taking in some, you know, selling some of the higher to protect yourself. If you're just buying the puts outside, you know, you are limiting, you could get it right and still lose money.
Exactly. Well, here's what I was looking at. I'll share with everybody real quick. I was looking at this. I haven't done anything with it yet, but I'm debating. Okay. I'm going to sell a put spread. Okay. If I do anything, I'll sell obviously more than one, but I'll sell a put spread. But I was looking at selling earlier like the 412, 400. Okay. And I think that was about a $7 and some credit at the time. Yeah. 760.
Right.
So my risk is 440 at max. Okay. But I can make 760 if I get to rip your face off rally. Okay. Right. Now, the other side of the coin is this is the same as, okay, without the potential for unlimited profit, but it's the same as buying the 400 put, okay, for 682, but I'm buying it for 240, for 440.
That's right. And you start making money intrinsically a hell of a lot higher than at
Right.
the 400 level.
Exactly. Okay. So again, you got to use your head when you're looking at these options. They're just not clear cut. You just buy them and forget it. You have to use your head. Okay.
Right.
Even the deep in the monies are a little bit out of control with how much premium they're carrying. Again, that's because if you look at the volatility as a big balloon, okay, the balloon is about ready to pop. Okay. Any last minute thoughts here, sir, before we
No, I think
move on?
I think that's excellent advice on the options. You know, it's a lazy game to go in there if you're bullish to buy a call, if you're bearish to buy a put. It's a lazy game, and it's not the right game. The right game is to look at the structure, look at where the volatility is, and to put together the right thing that increases your odds of getting it right. The thing is, the worst crime is to get the market right and lose money.
Yes, and it's happened to many.
Yeah, it happens a lot.
Because they overpay for
Right.
options all the time.
Right.
Just remember one thing.
Or they sell too cheap, right?
They options are never cheap, but they can get expensive because remember, there's always a market maker making a market on the other side of this trade.
Right.
And I was a market maker for 35 years on the floor. And I can tell you one thing for sure, when they came in crazily looking for things, we kept widening the spreads and moving the prices up because we were trading the bid offer spread, so we didn't care. But believe me, it's very hard.
My favorite trade, okay? You know what my favorite trade was when I was a market maker in the OTC market?
Yeah.
Was I was very often able to put on put spreads or call spreads, verticals,
Yep.
where I would basically sell the same premium that I would buy because of the wild market.
Right.
So I would be left with a book of beautiful risk-free ways of making money all without risk.
And you almost lock money in that we used to trade. I traded a lot of boxes, right? That
Right.
was, you buy a box. If it's a $5 box, you buy it for $4.50. You just locked up a half a buck. So
Exactly.
long and short of it is like, just be careful.
Right.
Okay? And just because it's going to do this, it doesn't mean you're running and buy naked something. The only thing you can trade naked by itself are the futures markets, because with the micros, you want to get long, you can buy a micro.
Right.
I mean, they're nothing, and there's no premium involved. So, all right, we're going to wrap up part one. Let me just stop this recording, and we'll get ready for part two. Stop. I got to let my girlfriend speak to me. Yep. Okay, and now we're gonna get right back to work. Okay, and start it again. So Andy can get in for much of it. Be ready to go. And what's up, everybody? Welcome aboard. For those just coming, our 1 hour Monday call turned into a 2.5 hour marathon, but we're here and happy to be here. What a crazy day, man. Wow. I mean, not a surprise. And I think this is a lesson I want to repeat one more time. Okay. The NASDAQ got clobbered today, but it was really down, what, 3%, 3.5%, 4%, whatever. I mean, if you just relate it back to a $10 stock, would you have a panic attack if the stock goes down 40 cents? It's the same thing. Okay. Remember, the higher prices get, you watch the percentage moves. That's what you're looking at. Forget about the dollars. Many of us have too much of a bad habit getting a conniption fit when we see 1,000-point move in the Dow. It's 3%. Okay. Don't let it do it. Don't be like the guy in the toilet, the bull in the toilet. Okay. I told you this wouldn't end well. And of course, I've said it for years and years and years. Once the Fed started this stupid program, that it was not going to end well. And of course, it isn't ending. So, and of course, we don't want to be these guys, right? Sell, Wilson, sell. Look, again, the worst trade any trader can ever make is one that is made out of panic. Okay. One that is made off of emotion, because you can bet your ass you're more often than not wrong. Okay. Because everybody else is panicking at the same time. Okay. And I have to say, sir, we did nail it. Okay. We have been on top of this the entire time, from the bond markets to everything else. We've been pretty much right on top of what was going to happen next. And nice job, my friend. It was very solid handicapping. Unlike what I did on Saturday with the Kentucky Derby, because I did not have Rich Strike.
I'm so angry at myself because every year I always go and bet the biggest long shot.
Yeah.
Throw $50 on it, because you know what? You never know. And this year I didn't.
It's funny because he wasn't even, when I showed it on Saturday morning to the options call,
He wasn't even in there.
He wasn't even eligible. I was looking at he didn't become eligible to race until Friday.
Unbelievable, huh?
So it was like the John Daly story in golf, if you remember that, when he won the PGA.
Yeah.
But anyways, it was nice. We've been pretty much on top of it. And again, but what we always will say to you, whether we're right or wrong, is that you got to have your disciplines and you got to watch what you're doing. If you're trading besides the trend trading, you got to have exit points, losses. You cannot just sit there and get schmattered, okay, as it goes. And I want to share this as well. This is 2008, and this is today. Okay, now look at and again, I'm not telling you this is going to happen. Again, I do believe that we're going down that far. I do believe that we're going down 40 to 60%. I've said that all along, okay? But I'm now showing you the reasoning that you could probably see that. Now, again, does it have to repeat itself? No. But if you go back in history and look, you'll see that this often designates the tops of markets. And what have we really seen? We've seen lower highs anyways.
Yeah.
Okay. So, don't kid yourself. And again, I'm not predicting it, and nor would I tell you to jump out and sell, but we are short our stuff, and we've been short for a while. So again, just be aware of it. It doesn't mean you're doing anything with it. Okay. But be aware. Okay. So that's what I'm trying to do. And of course, as always, we thank our service people. We're coming up to Memorial Day too. And, God bless you guys, all of you, the firemen, police, military, I don't care what they say. You guys are the best. And in any career, there's always a few bad apples, but you guys, without you guys, we couldn't do what we do. We couldn't exist. Here would be a war zone like it is in Chicago half the time. So, but thank you. We always salute you and take the time to appreciate you. Well, Russia's Victory Day could be a crucial moment for oil. Okay. Well, I guess it wasn't so crucial today. It got hammered.
Right. Yes, exactly.
It's interesting because, when they keep talking about these things, I can't stand it when they keep talking about the Russia's in default. Russia's not in default. The government might want you to believe they're in default, but the only way you can put them in default is what? Bring the oil back to $35 a barrel.
Yeah.
Okay. Actually, you don't have to go that low. They're making money and they're making people pay in rubles. Okay. So look, we'll see. It's a stupid war that should have been avoided, but of course, nobody here is going to stop them. Okay. So Ukraine grain strain, almost 25 million tons blocked from export. Well, we warned about this, did we not?
Day one.
Okay. And did you not say, even before the war ever started, you said wheat is a highly political commodity?
The most.
Okay. And here we're having, not only did Brazil have a lousy year and Australia have a lousy year, we're not off to a great start right now. And again, with technology, we still have time. But if Mother Nature does not cooperate, there's going to be a food shortage next year. And here we'll just have to pay a lot. But everywhere else, there may be riots or people starving. Okay. And this guy, what a jag-off this guy is. Bill Gates claims Musk buyout could make Twitter worse. Okay. Yeah, free speech would make a lot of things worse, wouldn't it, Bill? I mean, are we really to this point? And remember last week I said that we're as free as the government allows us to be? I mean, do you think that Musk can make Twitter worse?
I don't think. I think that Bill Gates makes the world worse.
I agree.
I think that Musk is I'm glad Musk bought Twitter. I hope he makes it better. I hope that he allows free speech on it. And I think Bill Gates, I don't listen to anything Bill Gates says because Bill Gates is just
but the problem is he's got too much money to accumulate a lot of
manipulator. He's a master manipulator. He's a Soros with a big mouth.
All right. Captain, I couldn't wait for you. I knew you were walking the dog. I'm sorry. We're only an hour and a half in. Anyways, China has the financial nuclear bombs if the West levies Russia-style sanctions, and they do. This is what really scares me out of all these headlines here, because China could crush us anyways. But at this moment, as weak as we are at the moment, okay, and they have a lot of things they could do, and if they
all they have to do is sell our bond market, just sell their bonds.
And you said, what else did you say? They could make gold against the yuan instead,
right?
Look,
I think they
do a lot of damage.
I think they could do that, but I think that if they just said, okay, we're going to sell all our U.S. bonds, and they would be very happy to take the loss.
Which movie you're talking about, Hank? I mean, you tell me what 2,000 Mules. That's the latest one about the voting fraud. But so look, again, this is very concerning, and I'm sure that the markets are a little bit concerned about it as well, because this is something this is real potential danger. to our economy. You know, the Shanghai shutdown, as I said before, I don't believe it was for COVID. I believe it was to penalize the United States because the supply chain is we already don't get goods. And remember, not only do we get a lot of imports from them, but we get drugs from China too. Why, I never figured that out. But again, that's a problem. So we'll see. In the meantime, always the words of wisdom from our friend Connie, who brings us always some great stuff. And you are free to choose, but you are not free from the consequence of your choice. Now, what could be better? Okay. It's almost what I was just talking about with he'll woke one, he'll drop 1,000 woke employees. The news, I mean, this statement is so true, and it goes right back to what we talked about with the option market. Okay, you're free to choose that just to buy them, but maybe there's a better way to do it because you are not free from the consequence. So Connie is always
yeah, and
right.
You know, life is a chess game. You always have to look a couple of moves ahead. You have to think. You can't.
Unfortunately, in this country, we play checkers.
Yeah, that's true.
Putin plays chess at about 3 moves ahead, and China plays at about 10 moves ahead.
Right.
But anyways, and of course, our new category, the State of the Union. Just to be clear, there is no plan to eliminate student debt. There's a plan to transfer that debt to those who don't owe it. I mean, how much more spot on could you be? Okay, I mean, you know, that money just because they forgive it, it doesn't go away. Okay, the debt doesn't go away. The debt gets transferred to us because we pay it. Okay?
Yeah, so then
like we paid the debt for General Motors and for the banks and for every other thing that they've done over the years. Again, that wasn't all this administration.
And those of us who worked really hard to send our kids to college and graduate school and all those things will wind up paying again for some other people's kids.
Right. I mean, it's terrible, terrible thing. And of course, I've been bitching for an hour and a half. I get one more, and this is the one that really gets to me. I'm sick and tired of those who celebrate athletes and actors that stand for their causes, but ignore China's human rights policy. They worry about nothing but the money. And again, you know, this goes back to when they had the issues in Hong Kong, and all the athletes and actors stood mute, okay, because of all the money that they get out of China. So when it came to an issue in this country, they were lined up to support those causes. Shannon Sharp tweeted out something. I couldn't find the exact tweet, but that was, I about broke something when I read it, because I'm telling you that I'm sick and tired. These guys make $50 million a year, but they, God forbid, they should step up for China. And the one guy who did step up for China, for Hong Kong, got fired from his job. Okay,
mostly NBA, huh?
Yeah, well, they're the biggest in China. Yeah, I mean, but it's just, and the actors. I mean, they change movies for these people. Okay, if there's anything offensive. Anyways, that's my bitch. I'm moving on. Now I know what you told me. I listen. What am I? Just get off the banana boat? I've been around. I get it. Okay. Anyways, so as we look at the markets now, that's obviously what we want to look at, anyways. And as we look at the YM, which is Yankee Michael, which is the Dow future, and it's just better to trade, we have broken down. Okay, it was at support on Friday, and today we have broken below. Now, this could be false. Again, just because it's through the major support doesn't mean it's going to continue. It could easily pop right back into consolidation. Okay, and certainly, if going from 34,000 to 32,000 in 3 days is a pretty sizable move. It is certainly a little bit steep, and which is again ties into our theory that there's a rip your face off rally coming. So, but what I would be looking at here is I'd say, first of all, I'm not a buyer. I'm only a seller, with the one exception is if I can sniff out the rally that I know is coming, I may put a position on, but it will not affect my major positions. I'll still be net short. Okay. In the meantime, I think 32,000 is the next key level to watch. Okay, which is what do we get to today? 32,037. 32 is to watch, but I'd be a very willing participant at 32,900 to 33,000. Okay, very willing participant. We are short. Okay, the S&P, Echo Sierra, same thing. This is worse. And again, this is another sign that we're in trouble. Is when the Dow is outperforming everything else, that is a sign of weakness. It is not a sign of strength. That is a sign that that's where money is running to, because we have this stupid risk on, risk off trade, which if you can figure out when risk on and risk off, you wouldn't have to, you'd never lose a dime. But of course, we'll talk about that another day. But in the meantime, last week we said 4,300 was a place to sell it. Okay. At first I said 42. Okay. And I said, but if you want to be more conservative, look for 43. The stone top was 43.03 and bang. Now we're at 39.89. Okay. There's no right now bottom to even look for. Okay. You're talking about now, 37, 38. So now again, I expect a big rally. And here, I think the first level we really want to look to sell at is maybe 41 or 41, 50, 42. Don't be, again, let the market run. All you want to do is look at a short-term chart that will, tomorrow, rip your face off. I gave you the rally. It's tomorrow. On one condition, the markets have to be lower coming into tomorrow morning. Okay. If they're higher, I'm selling right out of the gate, I'm selling. Okay. But if they're lower, and I'm hoping substantially lower, it'll come off of that. That's my opinion. In the meantime, there is no support. I would look to sell. I mean, 41's aggressive, and it seems like it's a long way, but it doesn't take long to get there when it goes. Okay. So I would be looking like at 4,100 first. Okay. Now, those who are real aggressive, you could look at 40, 50. But again, I'm just saying that, you want to let these rallies play and catch them when you can sense. And you can do it with a short-term chart. This is why we use these charts when we're short-term trading. You can use the shorter time frame to indicate there's a change. Okay. In the meantime, for today, 4,100 resistance. There is no support. Okay. This looks for spots to sell, but expect, again, don't sell too quickly. It's going to pop here somewhere pretty big. Okay. And the NASDAQ, November, Quebec, and this broke down already, and this is now a confirmed breakdown. Okay. Now, again, there's no support anywhere. 12.8, I'd be a willing seller, and that would be nice for a rip your face off rally to go right to 12.8. Okay. Again, there's not much to say here. This thing's going lower, and it's performed perfectly. And today's extra little bit of selling. Now, the other concern, as I mentioned in the pregame, Andy, is the volume is what it would be under a normal sell-off, which is telling us that there's a lot more sellers sitting out waiting, trying to let these buyers come in and buy it up a little bit.
Yes, exactly.
Okay. So in the meantime, there's no support. I would be looking to sell at 12.8. And the Russell, Romeo Tango Yankee. Again, this is broke down. It's breaking down. It broke the emergency level. Okay. And I would here be, I'd look at 1,800, but I think you have a better chance for 1,840. I would not, again, the only way I can actually give you an actual what I would do is to see the price action as it happens during the day. I can't tell you now because, again, I can give you the levels, but I'm also explaining to you that when it gets to those levels, you have to look at a shorter term chart that kind of signals to you that you are correct in what you saw. Okay. So we've got some pretty nasty stuff happening here, and I don't see anything that's going to save it. Okay. Again, there will be some rallies. It's coming. We're prepared for it to come. We understand it. And it's only really until further notice, it's just another opportunity to make more money. Okay. All right. As we move into the stocks, Apple, Alpha, Papa, Lima. Yeah. And we're short, so it's okay. All right. We're predominantly, as they say, short the world right now. Okay. But Apple, again, came down, and I would say, look at 150. Again, as long as I'm short, I'm not a buyer. Okay. But I'd say this is 150, 157.50. Okay. I think there's in this range here. And again, it did the same as always at earnings. It tried to pop. It had crappy reaction earnings, rallied the next couple of days, and now it's falling apart. Okay. So I think the next stop is 150. And I think if it can get through there, the next stop is probably 140. Okay. So 150 to 157.50. Okay. And we are short. Alpha go, oh my God, look at the miners, but this is down like 50% or 40%.
Well, they always underperform on the downside, and they outperform on the upside.
And we're short this anyway, so it's okay. Okay. Actually, the reason it's in the portfolio it's in is just for when we can be long it, but certainly we'll take the money from the benefit of being shorted, but this is really broken down. I mean, there's really no support. 950 would be resistance. And again, we're still short. Again, typically we use options. I would never short this stock naked.
Right. I was just going to say, the risk reward of being short this ain't too pretty.
I don't like $10 stocks for naked shorting. I don't have that much money to fight those. I'm not, what's his name? Chanos or Ackman. I'm not going to fight these guys. In the meantime, 950 looks like pretty solid resistance, and it looks pretty bad. But I would expect Okay, now this different than others. This has gone down so fast. I mean, we went from 1080 to 850. That's 20%. You can expect to probably a rally back to 950 without a shock. Okay. AMD, Alpha Michael Delta, okay, which we are still short. And this is breaking back down again. And it popped. Look at it. It went right about to where we said it could go. And it coming right down. And it looks like 85 is the next target. And after that, you're looking at 80, 75. Again, we're short, so I'm not a buyer anyways. I'm only a seller. Again, I did sell it here, as I said I would last week. I said, if it opened higher, I was selling it. If it opened at 100, which it did, I would sell it, and I did. But how did I do it? I sold a call spread. I didn't just go out and willy-nilly buy a put. I sold a spread, knowing that if it failed, I'd be okay, and B, I wouldn't be a victim of a volatility collapse. Okay, and it worked out just fine, just perfect. Okay, and in the meantime, 83 to 92, 83 to 92, and Baba. Oh well, I guess Munger's retired and there's no more buyers for this anymore. We're still short this. I would say that you're probably going to see some support around 81, 82. Your resistance is somewhere right around 90. Again, this particular stock itself can get vicious and spikes and sells. I'd probably look. We're already short, but if I were going to look to sell more, I'd probably wait for 95. Okay, and hope that it fills up this top spot here. I'm a buyer at no price, but it should hold at 81, 82, and then 80, and then below there, it's going to test as low at 75.
That thing's been in such a bearish trend, huh?
Yeah. Yep. So I'd say, like I said, for today, make it 80 to 95. And again, if you think that's too wide of a range, well, all we have to do is look at the expectation of movement in this thing. Okay, because that'll tell you if I'm nuts or not, which we all know I'm nuts, but I mean, you've got an $8 expected move for the rest of this week. Okay, if you go to the 20th, which is 10 days, 10 trading days, it's $12. That happens to fit my range pretty good. Okay, so in the meantime, 80 to 95. Look at this. Now we have not traded this yet, but this is what we use as a representation of Bitcoin, BITO. Okay, it's one of them. Now we haven't traded this because we're still really trying to get a feel for how they handle the future. This is directly based on the future. Okay, and most futures have many expiration months. The Bitcoin has not been able to do that yet. Okay, so it's hard to get a read for how they're going to handle what they call backwardation and contango. But in the meantime, this looks awfully ugly. And again, I'm going to tell you something, I might say anything every week. If you want to gamble and you think this is the bottom of Bitcoin, you want to hold it, then here's your chance. If you don't want to get in Bitcoin through the wallets or whatever, and by the way, Trader will have Bitcoin as part of the platform pretty soon, and you'll be able to use that money the money will be crossed back and forth, so you can use it for your margin as well. But in the meantime, look, from when I'm looking at here, I'd like to be a seller at 22 if it would ever get there. I might even look at 20. Okay. But again, I'm a buyer of Bitcoin, and I already trade the future, and I don't trade this yet because again, there's just nothing for me to trade here. Okay. But I do watch it for that reason. But there is no support. Okay. BitQ, Bravo, India, Tango, Quebec. Okay. Boy, this is ugly. And I own this too. Jeez Louise. But again, I knew when I bought it. Okay. The same when I bought the actual, cryptos. I had X amount of risk in mind, and I'm not worried about it one way or the other. Okay. I believe that Bitcoin will be fine. I think you're seeing a tremendous amount more of acceptance throughout the payment plans. Now, maybe the government's going to drop the hammer, but they're certainly participating in it now. Okay. In fact, there's a lot of things that are directly correlated. So in the meantime, we don't carry this in any portfolio either. To me, you're probably looking at $11 as resistance, and there's zero support. I mean, this is a new low. Okay. So this has gone from 34, 35 down to 9. Pretty nasty. Bitcoin soup. Chewy. Charlie Hotel Whiskey Yankee. Well, again, we're still short and it's still going down, which is, it's a shame because it's a great company. Okay. But again, doesn't matter how good the company is. What matters is the price action. And the price action says you should be short, and we are. And we've been short for quite a while here. Okay. I think that, again, you're probably looking at, 28 would be resistance. But now I would not be a seller. I wouldn't even be looking at 28 to add. I would look at 32. And remember, we've seen some of these big spike rallies in this. Remember, whatever you're used to seeing in a stock, especially if it's trending in a certain direction, it's never as big as what's going to happen when you get the opposite move, which is just helping it even itself out to get back on pace to be in the trend that it's in. So this jumping to 32 would not even be a shock. But again, that's why I wouldn't be in such a hurry to sell to 28 when I think that there's a better chance that it could probably go back to 32 just as a trick. So I'd rather sell it at 32 than 28. What about you?
It's, I love the company.
I do too.
It's a piece of animal excrement.
I go out my backyard, pick it up every day. I know it.
It is. I mean, I love this. I love the company, but
there's tremendous service companies. They're just obviously they're in trouble.
And how about, by the way, all of these things. Look, Coinbase. Look at Chanos making a fortune.
Yep, right? Another new low.
Right.
And now this, to me, I own this, and Andy owns it, but this is a blow off. I mean, again, is it mean it's going to work? I don't know. Okay, but this would be someone. Now I will look at this tomorrow morning. Okay, and if the markets do what I hope they do, which is get cracked early, I will look at this and I'll probably put an additional long on. But the additional will be a trade only. The one I own now is hedged. Okay, but right now I would say that resistance is now at 100, and of course, when you have a brand new low, and they got earnings on Wednesday. Is that right? I know we have an earnings plate on here. Is that right? Is one? Oh yeah, the 10th.
Yeah, Wednesday, 10th.
That's tomorrow.
That's tomorrow.
That's tomorrow. Tomorrow, I got earnings tomorrow. So don't do anything until you see the earnings.
Yeah. By the way, so Coinbase on its first day out there traded to a market cap of 100 billion. Right. All right. Yep. Now the market cap's around. It's around 20, I would say. I don't know the exact number. I think it's around 20. If you could look it up, that would be great. But take my word, it's about 20 billion at this low price.
Right.
So if you're the ICE or you're the CME and you're looking for a big exposure to crypto, this becomes a very nice, they did all the work to set this up. This becomes a very nice thing that fits in like a glove and gives you a huge exposure. So the lower this thing goes, I think the more this becomes a takeover play.
Well, we were looking for that. And again, we got to find it. I agree. I mean, look, it would be perfect for the CME, the ICE, any of the exchanges to absorb this. But in the meantime, it's got earnings. Now look at this. See, it's expecting tomorrow, okay, the day of earnings. I mean, this is for the week, $20 basically. So that's a 22% move. Okay.
$20 they're expecting, huh?
Okay.
What, 10 each side?
$20 either way. We don't know which way. It's plus or minus.
$20 either side. That's enormous. That's a 24% move they're expecting.
So at the end of the day, okay, if it moves outside of that 20%, either side, I will take the opposite. As I told you in AMD last week, I'm telling you this week, if it goes outside of that range on either side, I will take the opposite. If it goes down to 60, I'm going to buy more, and I'm going to really buy more because I'll hedge it anyway. But if it goes up to 110, I'll be selling just for trade. Again, I'm already shorted. Actually, I'm short and long it. I own it in my retirement account, but in my trading, we're short. Okay. So in the meantime, there is no level, there's no support, and you'll have to see what earnings are. But without earnings, I'd be looking first at like 105 and then 110, 120. But again, let's let the earnings come out first.
But if this thing goes down 24% tomorrow, right?
Yeah.
That makes the market cap.
It cuts down by another 20%. It makes it about 15 billion.
Yeah, it becomes real
from 100. Not bad.
It becomes real cheap.
Nice trade.
Right.
I wish I was there selling it at 400. Anyways, you need to go, babe.
Go
ahead if you want. I mean, this is you. It's up to you.
I do. I have to help the kids today.
No, go.
Thank you, and I'll see you guys next Monday. Okay.
Take care, buddy. Thank you.
Travel well. Are you coming back this week?
I'm coming back tomorrow night.
Travel well. Talk to you soon.
Thanks, babe. All right, guys. Well, you're now back to me, and look, coin is obviously we gave, and then DraftKings. I told you at 15 I was done. I didn't get out of it. I still own it. I'm still hedged it, but it's ugly. And this looks like there's no hope for it. And again, there's obviously, I've said many times, a lot more problems to these casino industry stuff because they can't make as much as a normal company. They can't get a big score. They got to grind it out. we're short, okay, and we remain short. If I were looking at this now, I am not going to short it other than in the portfolio models, but I wouldn't short on my own because I don't short $15 stocks. It's just not my forte. Okay, but certainly I'd say that probably 1350 is resistance, and there is zero support. And they have earnings today. Is that right? Am I reading that right? Was there earnings today? Hold on. I know we had a trade on earnings, but I didn't know if it was today. I didn't realize it was today already. Or did it not have earnings? Uh-oh. Oh no, 122. Oh, it was this morning before the open. Okay. So they sucked, which makes sense because their acquisition cost is so high. Look, at some point you're gonna get a big bouncer, but it doesn't mean that it's gonna continue. For now, you want to look to sell this, and I think 1350 and then 16 if you're gonna trade it that way. No support. Not even, I would even give you a gamble trade here. How's that? Take care, buddy. Yeah. So Facebook, Foxtrot, Bravo. Okay, which we are long at the moment. Okay, and again, it's really just stuck in this consolidation range. It's kind of churning. This is always a miserable pattern for trend trading. For here, you look at it from 180 to 220. Okay. First Solar, Foxtrot, Sierra, Lima, Romeo, which we're still short. Okay, and again, it continues to break down. So another break through a key spot, which now brings 65 into play, and then 60. Look, I mean, I'd be a seller here. I'd be a willing seller here at 75 for sure. I will take a look at it at 70 to add. I mean, this is awful, but again, it should be more on that pace. So a rally back to 75 would be perfect. Okay, but for today, there is no real support. 75 sell. Okay, GDX, Golf Delta X-ray. Look at this. It was just $40. What the hell happened? Okay, but again, as we've said many times, the miners are going to get punished. They perform better in an uptrend, and they get more punished, and they're really just ripping them a new whatchamacallit. Okay, and so now you're looking at the next real support is probably 31. Okay, and your resistance is at 34. Okay. Now, I only trade this in the portfolio. I don't trade it on the outside because for me, it's really not active enough for what I want to do. Okay, so I tend to shy away from things like this, but again, we do have it in the portfolio and I do have it there, but it's not one that I would trade actively for myself. But if you do, that's the levels to watch. Goldman Sachs, Gulf Sierra. Okay, Gulf Sierra is. Let me shut my window because these dogs are driving me crazy, and I'm sure that if you're hearing them, maybe driving you crazy too. One second. I'll suffocate for a while. Be a little hot, but I'll deal with it anyway. So Goldman Sachs, okay, which we're short, and here we are. This is a key moment in time. Around the 300 level. I mean, again, you could say 303, but it's 300 to 320. But this looks pretty bad. And each time, again, it continues to follow the path lower. So again, watch the 300 level. We're already short. Certainly, I would love to sell more at 320. And I think if you get the rip your face off rally, it's going to get to 320. Again, it doesn't take long. Remember, a rip your face off rally is a time when traders and people are panicking. Okay, there is no regard for price or time. They just get me out. So that's what I expect to see. So 320 would not be a stretch. 300 to 320. IWM, which we are still short. And again, this is also breaking down, right? So now you get 185 resistance or so. Support is, I don't know, down back here around 150-ish, 155. Look, this is ugly. This is going, looks like it's going a lot lower. Now you might get, and this also ties in to the potential dead cat bounce or the rip your face off rally. The Russell itself was kind of a blow off. Even though volume was so light, volume was much higher than any time in the past couple of months, which could mean that it might attract some buying, some bottom pickers, and you could see a rally. I'd look at 185 to sell, but certainly I'd be loading up the barrels at 190 to sell. I'm not a buyer at any price, okay, except if a quick gamble trade. Mara, Michael Alpha, Romeo Alpha, which we are short. And my friend tells me this is going to $6, and I think she's right. It's going. This keeps breaking down. Okay. Again, it broke another level. There is no, we actually started watching this at $6 a long time ago. Okay. Got all the way up to 80. I mean, you can't, the only way you buy this is you say, you know what? I want some sort of exposure to Bitcoin. That's what I'm going to buy. Okay. Other than that, it's unbuyable. And certainly it's not one that I would be actively shorting if I didn't already have a short position in it. Okay. Again, this goes back to the, to me, yeah, I could go down to 6, but it could also go back to 60. So I don't like those odds. Okay. In the meantime, $15 is resistance. That's what we use. Neo, look at this. November India Oscar, which we are still short as well. Look, I only tell you this, okay, that, these Chinese stocks have been very weak, and this has been exceptionally weak. And you've got just a market that seems like it wants to get murdered. And maybe this is going the way of Lucan Coffee and some of the others, but it better hold $13 if you're holding it a long-term trade, because if it doesn't hold 13, I'd say probably kiss it goodnight. Okay, but we are short. I would say, 16 would be a spot to sell. It better hold around 13 or so, 12 or 13 in this area. Okay, otherwise it could be really nasty, kind of like Nugget, November Uniform Golf Tango. Look at it. Okay. It was just 80. Wait a second, now it got halved. And this is the danger why we always warn you about these leveraged ETFs. Okay, it just got halved from 3 weeks ago. Okay, so when you were sailing along, singing a song, if you held it, you're now down 50%. Okay, there's no support here until probably 46, 47, 43. Okay, and I mean certainly 55 is a spot to sell it. 43 to 55. Nvidia, look at this. Hey Connie, it went down to more today than what we originally bought it for on the Monday call about 10 years ago. Anyways, it broke down. That's a breakdown. Okay. And we're still shorted, which is a good thing. Okay. Now, again, what do I expect? Well, let's see if we can find anywhere. Actually, I could do an easier way for everybody. Hold on. Instead of scrolling, I can just put up a weekly chart and that'll give me a little bit more information. There we go. And I would say that we've actually kind of violated the next support level. Now this could be tentative. But I'd be looking at probably 155 as next. Okay. And again, it could bounce. Listen, there's no announcement of when it's going to start to rally again, but I would think you're going to see 155, and I would be a seller. I'd look at 180, but I think I try to wait for 190. Let's make it 155 to 190. Okay. We've been together for a long time, honey. Yeah. I bailed you out from your good friend, CT. Anyways, Penn, Papa Echo November number. Look at this. Wow. Okay. Now again, this is how the trends work. Okay. This is a casino stock, but it doesn't matter. They had the same problem as DraftKings, over leveraged, too much acquisition costs for what they can do. So now, okay, it's basically in free fall. Now I would expect a rally, and I think 36 is the place to look to sell it. And of course, if I were to look to buy, which I'm not looking anymore, because I think again we were wrong on these initially. There really is no real spot right now. I mean, maybe at $20, but I believe now. Okay, I was wrong when we originally handicapped these stocks because I didn't realize how deep the acquisition cost was. But I think the only savior for these is the takeovers. Okay, and somebody will buy them eventually because the infrastructure they built is phenomenal. And I think as Vegas is going to be forced to start to keep up with the times, because people are getting awfully angry in Vegas, and they're going to outside apps, and Vegas is not losing business, but they're not gaining as much as these outside apps are. And since they're going more and more, and California is putting on the ballot in November, you're going to see that these things will probably be bought up. But in the meantime, from a straight look at it, this would be one that is fundamentally changed if I were going to get rid of one. Okay. Now I'm holding it because, I just hedge it, but I don't buy anymore. Okay. In the meantime, so 30 to 36 kind. And we're short. Qs, breakdown, breakdancing. Again, we're short. And look, this did not have the volume as the IWN had. So this is not a blow up bottom, but certainly 310 would be an area I'd look at to potentially sell it. Okay. I'm not a buyer anywhere right now. Okay. 310 sell, buy nowhere. Riot, Romeo, India, Oscar, Tango. And this is back to where we started watching it. It's $6 tomorrow, probably. Okay. And here you go. Okay. And again, this is just exposure. Now, I believe, I don't know, listen, I'm not a fundamentalist, right? I don't study, I don't read, I watch VSiN sports information only. I don't ever read or look at the news. But I know that they're miners, and I know that these miners are getting killed with all these higher costs for energy. So in the meantime, $10 is resistance. We don't carry a position in this in any of our portfolios. 10 would be resistance, which I would not sell only because I do not sell $10 stocks, but I don't think there's any place to even buy it. I think buying it right now is like you're taking a shot. And look, you want to gamble, be aware that you are gambling if you make a trade. Okay. Roku, what did I tell you? Gets through 100 and bang, 80's coming. And here we are. Okay. And, again, you watch certain things, you start to understand these things. So now we're going to come down and check probably, 85 is a little bit of support. I think the resistance is at 100. And I think 100 is solid. Now, again, the only thing that can preclude the 100, okay, is again, a rip your face off rally where people don't care about price or time is the one element that can create a little bit of a problem. Okay. And I want you to be aware of that ahead of time, that could be, again, when you see the kind of move that I'm talking about, that I expect to see, they're irrational. They're like the markets often are irrational. Okay. And if you get an irrational move, you can see a lot of crazy things happen and prices you would never expect it. So I'm telling you to expect it. And if it gets through and goes to my absolute top here would be 110. Okay. Square Dance, Sierra Quebec, or Block, they call it. Is that what they call it? Block? Yeah. Okay. And we're short this as well. And again, broken down. As I said, if it gets through 100, 80, here we come. And I guess what? I think you're going to see even lower. But again, this falls into the same category. These high tech mamas, they fit into that same category. They can get wild for a day or two and then just revert back to form. I mean, this stock went from 30 to 400 or what it was. So in the meantime, okay, I'm only right now looking to be a seller, and I'd be looking at 100. Okay. The SPY, Sierra Papa Yankee, again, did not have the same volume as the Russell. Okay. But did break down. Okay. We are still short. Okay. I think you want to watch the 400 level here. I think this is going to turn out to be huge. Okay. One way or the other, because it's either going to turn out to be support, which I don't think so. I think it's going to turn out to be resistance, but watch 400. Certainly if it pops to 415, I would sell it for sure. Okay. Tango Quebec, which we carry no position, but of course this is the NASDAQ on steroids. And of course this was didn't they just split this? It was $110 and now it's 30. Okay. This will be a spot. There'll always be a spot for this. Now we don't carry a lot of these because of that leverage part of it, they're dangerous. But there'll be a time and place for this. Again, you'd be looking to be a buyer of this. I mean, but as I look at this chart, I'd be a seller at 40. Okay. Tesla. What happened, Mr. Musk? Twitter must have killed you. Look at this. And again, I've never made a dime. Well, actually, a couple of times. I'm a net loser. I don't trade it myself anymore. I just check it every week. But it was in consolidation and it broke to the downside. Okay, so that would mean that now 720 is probably in play. Okay, and it's probably at resistance of about 880. Again, I don't trade this one. To me, I can trade just about anything and be comfortable, but I don't like trading this. It just never. In my mind, I can only sell it, and that's where you get in trouble. First of all, because it's an opinion. So, but to me, 720 to 900. Okay. Look at this Whiskey Yankee, and they get earnings tomorrow, I think. Yeah, or today. Was it today or tomorrow? Look, I guess to look. That's pretty ugly. I didn't realize how I love wind too. Oh, they were today too. Oh, what's it doing? Oh, it's at $61. Okay, didn't do much. Okay, so look, we're short. Okay, and it looks like it's got room to go. Now, I love wind personally. I mean, I own it in my retirement account. I'm going to buy more because I do think that they're a good company. But from a trading standpoint, we've been short for a while, and it keeps breaking down. And where is the support going to be found? Let's see. I don't even know I don't know if I can find it. Okay. I gotta go farther out. I gotta go to a longer chart here. I gotta go back to March of 2020. Okay. Right about where it's at. Okay. But this is a pretty ugly pattern coming to this. I wouldn't be surprised if it broke lower. Look, when it looks to me, when I can identify that it looks better, I'm going to be a buyer just for my retirement account. Okay. But for today, watch 60. Okay. And certainly you could be a seller at 70 all day long right now. Okay. XBI, as we said, look at this. Once it got through, bang, 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 good night. I mean, I don't trade this myself anymore, but 73 is the resistance, and I would have no problem selling it there, and there is no support. And zoom. Believe it or not, one of the stronger of these bunch, but they're all breaking down. Okay. This is typical action in a market that is breaking down. Okay. Yes, thank you very much. It's a typical action in a market breaking down. Okay. It starts with the higher flyers, and then the more solid starts to get tortured. And then there is nothing immune, which is why I always laugh at that ridiculous risk on, risk off garbage that they spew. Okay. My words to you are, look, volumes are still light. Volatility is getting up there. Just know the type of trade you're making when you make it, so you don't make the right trade. You don't hit the direction right, but you lose money because you had the wrong trade on. Okay, very important. And I'm sorry, I didn't give you some, honey. That's my bad. I got away from it. Resistance at 100. Okay, but I would seriously, if I'm going to trade this, I'm going to wait for 110. 100 is the first resistance. But again, if we get this rip your face off rally, it could be a hard charger first, because remember, what brought it down is also a lot of short positions. When shorts are covering, they don't care what they're paying. They want out. Okay. So again, I'm always going to give a little bit of extra room if I'm expecting a squeeze or whatever. Okay. So, but be careful and make sure that you understand the trade you're putting on. And if you really want to get short or long, use the futures market. You can use the micros. They're not expensive, and you don't have to take a lot of risk. You take less risk trading a micro than you take trading a stock, trading an option. I'll tell you that. In the meantime, HSIC, Hotel Sierra India Charlie. Hotel Sierra India Charlie. Looks okay. Henry Shiny. I mean, look at it. It's actually still, relatively solid. I mean, it's coming into a place where it's going to make a much bigger move. I mean, certainly it's a hell of a lot stronger than anything else is right now. Okay, I think they probably pay a pretty good dividend too, don't they? You got it, guys. Okay, coin time tomorrow. Yeah, we'll see. I hope so. We'll see what happens. I mean, I gave you my conditions for the rip your face off rally. It's going to come out of an ugly opening. That's what I predict. Okay. TTD. I already did in the video. If you want the video, you got to go back to the recording. I already did it once. TTD. That's in my regular list. The trade desk doesn't look so good. Breaking down. This looks pretty ugly. Okay. I would not be even thinking of buying this right now. If I were going to trade this, which I do not, I'd be a seller at 60. I'd look at 52. Okay. To me, the only case I can make for potentially buying this one is maybe the volume was enough today to maybe create a blow off. That doesn't mean it won't be good down the road. Okay. So again, I'm talking about right now. Okay. So at the end of the day, I think just forget it. Where you been in the mornings, big boy? Marvel. I'm sure I could look at Marvel. For you, I could do anything. Where you been in the morning? I haven't seen you. What are you working too hard? Michael Romeo Victor Lima. Well, as you know, we carry a position on this, as you know, and we're short. Okay. Look, I like the company. I think it's a great company. Okay. I own it, in my retirement account, but I think, listen, it's pretty nasty right now. I think that, this is a question. Are you going to buy it to hedge it, or you're buying it to get long? If you're buying it to hedge it, I could buy it anyway. Okay. And I wouldn't have a problem buying it here, because I think if I'm right, you get to rip your face off rally, you'll get a roll out of it right away. Okay. But again, if you're looking to buy it, it's got no basis for me to say, where I'd look to be a buyer right now. Let me just look at a longer term chart. Kind of right. I mean, it is actually kind of right here if this holds. Okay. But some will make the case that this could be a head and shoulders. You're at the neckline. There's a whole bunch of things to look at this. I like the company. Again, that's why I would buy it and hedge it. That's what I'd be looking at. Okay, for myself. Okay, I'm not looking to actively trade it, but we do carry a short position in it. Yeah, hedging it work. I know it works. It's pretty damn good too, right? So look, just be careful. Look, you know it's coming. Okay, so don't become an aggressive short at the bottom. Now, this is not, I don't think this is the end all bottom, but I think you could be seeing a bottoming process to bring a 4, 5, 6% rally. And if you want to sit through that short, it's pretty painful. So be careful. Okay, don't let your opinion or your greed get in the way of making money. Okay, kids. All right. I have a great week. Just be careful. Like I said, we're still absent volume, which is a concern. So just be very careful and pick your spots, pick the right positions, because if you do, you'll be a hell of a lot happier. Good night, all. Have a great week. Thanks. I appreciate it all. We'll see you. I'll see somebody every day, but next week, next Monday. Have a great week, everybody. Adios.